The average one-year price target for First Republic Bank is $91.80. The forecasts range from a low of $90.90 to a high of $94.50. A stock's price target is the price at which analysts consider it fairly valued with respect to its projected earnings and historical earnings. Analysts typically set price targets that correspond to their buy or sell recommendations. To come up with their price target, an analyst must first determine the stock's fair value. A common way that analysts calculate the price target for a stock is by creating a multiple of the price-to-earnings ratio. To calculate this, analysts will multiply the market price by the company's trailing 12-month earnings. For a company with a 12-month earnings growth rate of 10% and a stock that is trading at $30, the multiplier would be 1.10. Based on this information, a possible price target would be 1.10 times 30 is equal to $33. Findle price targets are generated from a collection of forecasts made by different analysts. We provide the high, low, average, and median values for the stock. Upcoming earnings dates for First Republic Bank. The next scheduled earnings announcement date for First Republic Bank is January 12, 2024. The intrinsic value of one FRCB stock under the best-case scenario is $172.26. Compared to the current market price of $0.1, First Republic Bank is undervalued by 100%. First Republic Bank's profitability score is 56 out of 100. We take all the information about a company's profitability, such as its margins, capital efficiency, free cash flow generating ability, and more, and consolidate it into one single number, the profitability score. The higher the profitability score, the more profitable the company is. Exclusive JP Morgan begins First Republic makeover as it opens more branches. New York, Reuters, JP Morgan Chase is preparing to overhaul branches it acquired from failed First Republic Bank, OTC, FRCB, as the lender expands its formidable national footprint. Branches have been a winning strategy for us that is helping us capture more market share, Jennifer Roberts, CEO of Chase Consumer Banking, told Reuters in an interview. Of the customers who hold deposits with the bank, 75% visit a branch annually, she said. The largest U.S. lender has more than 4,800 branches across 48 states. By the end of this year, JP Morgan is likely to open 167 locations, exceeding an earlier projection of 150, Roberts said. Rival Bank of America is also adding branches. The moves contrast with a national decline as consumers use more online services. U.S. banks closed 123 branches and opened 80 in October, bringing the total number of active bank branches at the end of the month to 77,690, according to S&P. JP Morgan added 84 branches when it acquired First Republic in May, the largest bank to fail since 2008. In June, JP Morgan announced plans to shut 21 of those locations. Even though there could be some branch network consolidations, the total number of new branches would be higher, and you will see our branch network growing, Roberts said. JP Morgan had the highest net branch openings in the U.S. in October, opening 22 branches and closing 14 others, according to S&P. In the last 12 months, the company has opened 157 branches and closed 163. First Republic's recipe. JP Morgan has retained 90% of First Republic customers. Marianne Lake, co-CEO of JP Morgan's Consumer and Community Bank, told investors last week. The lender will start the branch makeover by shutting 2 flagship sites in New York and San Francisco that will reopen in June. The 2 revamped locations will be reopened as the first-ever JP Morgan branches focused on affluent clients and have a different design than Chase retail branches. They will probably incorporate some of First Republic's signature perks, like umbrellas, cookies, and coffee. The strategy here is to take some of the white glove service that First Republic had, and their clients love, and marry that with the scale that JP Morgan has, said Mark Donovan, the CEO of Chase Home Lending, who is among the executives overseeing the First Republic integration process. First Republic had a very nice recipe for serving affluent clients that JP Morgan aims to retain, Roberts said. There is an opportunity to do that more there by elevating training, and we are figuring out how we can accomplish it, she added. The morning after the acquisition was announced, Roberts and Donovan were at First Republic's headquarters in San Francisco to plan the integration and addressed employees to allay their concerns after the bank collapsed. While there have been some departures, a majority of First Republic employees who moved to JP Morgan in July have stayed put, a spokesperson said. Even though we saw some attrition in the summer mainly from the sales team or bankers who were in client relationship roles, it has largely stabilized now, O'Donovan said. In addition, here is a video clip of Mad Money, as Jim Cramer is talking about earnings day for banks this Friday. On January 11, 2024, Jim is also being neutral on JP Morgan, which means a rise in share value for First Republic could see some upside movement this Friday.
Morgan Chase and Wells Fargo. Tonight I want to get you ready for this initial earnings blitz because the banks can set the tone for the entire earnings season itself because they touch on so many parts of the economy. Last year, most of the big money centers came out of the regional banking crisis smelling like roses. These were the safest places to deposit your money in a world where we are getting actual bank runs. JP Morgan finished the year up 27%. Wells Fargo rallied 19%. Citigroup jumped 14%. It was only Bank of America that did poorly, up just 1.7%, because it had a large balance of unrealized losses from its bond investments, which is one of the things that brought down Silicon Valley Bank and First Republic. But that happened because the Fed tightened aggressively. There were absolutely no solvency issues at Bank of America. And now, well, that long rates have been coming down for months. It's no longer a problem, maybe an opportunity. After last year's moves, though, their valuations are all over the place. I like to look at the price of tangible book value for banks, meaning what the institution would be worth if you liquidated the whole thing overnight, which I know it's not going to happen, but it's just good apples-to-apples way to look. JP Morgan trades at more than 2 times book value, which is pretty expensive. They deserve a premium, but that's getting up there. Bank of America and Wells Fargo trade at 1.4 and 1.3 times book value, respectively. Citi trades at just 0.6 times book value, making it the cheapest by a wide margin, although one could argue that there's something very wrong about anything that cheap. Raises eyebrows. From a different perspective, they all sell for 9 to 11 times this year's earnings estimates. By the way, that is historically low. What about the narrative? JP Morgan remains very well liked, but not quite beloved. Deutsche Bank just upgraded the stock from hold to buy yesterday. However, I don't see many analysts scrambling to name it a top pick for 2024 or anything. I think JP Morgan's a real good stock that can grind higher. I'd say over time. It's kind of like the Cleveland Browns, you know? But maybe not one that can scream higher at any given point in time.